The credit score impact. Recent changes in credit reporting rules have made the relationship between buy now, pay later services and credit scores much more direct and far riskier for consumers who miss payments. Since May 2024, BNPL defaults are now included on credit reports, putting them on the same footing as missed credit card payments. This means that a single missed BNPL installment can drag a credit score down by 50 to 100 points, a drop that can move someone from good to fair credit or from fair to poor, with immediate consequences for access to future loans and the cost of borrowing. For years, BNPL loans operated outside the traditional credit system. Missed payments and defaults were invisible to lenders, and users could stack debt across multiple platforms without worrying about their credit histories. Now the landscape has shifted. BNPL providers must follow the same standards as credit cards, including reporting late payments and defaults to the major bureaus. The result is that the once hidden risks of installment debt have become highly visible and potentially damaging parts of a consumer's financial record. Consumers who use BNPL tend to be more vulnerable to these credit impacts from the start. According to the Consumer Financial Protection Bureau, 45% of BNPL originations go to borrowers with deep subprime credit, while another 16% are issued to those with subprime scores. These are individuals who already face higher borrowing costs and have less margin for error. For them, even a modest drop in credit score can mean being denied for new credit entirely or being forced to accept much higher interest rates. The effect is amplified for younger users, who have shorter credit histories and less time to recover from negative marks. The pattern of borrowing also contributes to the risk. Before turning to BNPL, consumers often show steadily rising credit card balances. Their average utilization rates are between 60% and 66%, nearly double the 34% average for non-BNPL users. This indicates that many are already stretching their budgets before taking on new installment obligations. When BNPL is layered on top of existing credit card, student loan, and personal loan debt, the risk of missing payments grows, and the consequences for credit scores multiply. The impact doesn't stop with late payments. Each new BNPL application can trigger a hard inquiry, which chips away at a credit score even if the loan is repaid on time.